No, your eyes are not deceiving you. It is not earnings season, but Micron is reporting earnings this week, along with about 24 other companies, some that are very interesting. So I thought we'd do a special earnings all-star this week to highlight Micron and these other names. Now, Micron has been the source of much angst over the last couple of weeks, so this is a big earnings report. But let's check in on some of these other names that are also reporting, because I think you might be surprised at what those charts look like. So we're going to lead it off with Copart. I didn't even aware of this company until I took a look at this chart, and I was like, holy cow, look at that great chart. Hasn't missed since back in 2015. Now, Copart is an online car auction company. They have operations globally in 11 countries. They have about 200 locations, so you can buy cars at auction online, and it's like banks, insurance companies, and some regular average Joes selling their cars on there. So as you can see, we got some nice big beats in here, and the shares are off to the races. Now, they're not real cheap. It's trading around 30 times, but expected to see double-digit earnings growth this year. So this is one, if you're looking for kind of a hot trade, you might want to check it out. Then we're going to get Red Hat. This is also a pretty strong chart. As you can see, it hasn't missed since our data began in 2015. And so that's great. It's got this great track record. Shares are off those highs, though, but we'll see if this next earnings report can give it some boost. They're the open software company. They're not cheap. They're trading at 58 times. But again, another double-digit earnings growth expected here. So this is another one you might want to watch. Then we're going to switch it over to Thor Industries. I have talked about them in the past, I believe. THO is the ticker here, and these are the RVs. So while RV sales are still near all-time highs, as those baby boomers and the millennials both are buying the RVs, you can see those shares are really down off their highs. A lot of this has to do with the tariffs that were put on. They use a lot of steel and aluminum. And then additionally, they've had trouble finding labor, actually, to build the RVs. So a couple things in the mix there, but this is one you're going to want to watch to see if maybe the worst is over in these shares. Then we're going to get Darden. This is Olive Garden and Capital Grille, and they've got a couple other chains. Great earnings beat record. They haven't missed since 2014. That's a long time. And those shares have really taken off here. So gotta like what's happening in some of the restaurant areas. The consumer is strong. The consumer does want to eat out. So if you have the brands that they're looking for, things are pretty good here. So Darden is one of the early restaurant chains to report, or late, depending on how you might want to look at it. But if you want to get a handle on the consumer, check this one out. And now we're finally going to get over to Micron. So I brought the earnings surprise chart. They only have that one miss in 2015. Otherwise, it's been pretty smooth going, but you can see those shares are down off their highs here, and that is because there's some weakness in the DRAM area. It's the down cycle is the concern. This always happens. As you can see, we had the down cycle heading into 2016. That's why the shares declined there. Now, I brought a longer chart with the 20-year outlook. You can see after the dot-com boom, that huge gain, and then it's been up and down as cyclical stocks are usually doing. They'll have these gains when the earnings go up, then the earnings decline, and you have the down cycle. So everybody's worried about the down cycle again with Micron. We're going to see what they have to say. The most important thing in this earnings report will be the conference call. So if you're trading it or you're owning it, you want to listen in. And then we'll see what they're actually saying about the demand. Now, a lot of the analysts are kind of mixed. They see the weakness happening in the industry too. This would be normal. But they feel like the shares are still decently priced, and some of the selling in the stock may be overdone. But we won't know until we actually hear from the company. That's why this earnings report is such a big deal. So we'll see. The trading only at 4 times. It's traded a little bit cheaper than that in the recent past. Just a couple weeks ago, it's trading at like 3.5 times. So those earnings estimates starting to come down a little bit. That has me a little concerned about value trap issues, but we'll see how much it's going to come down after this earnings call, because this will be the light on the issue. So definitely tune in. That's all the advice I can really give you. I am expecting another beat just because that's what they've been doing. but the beat won't be the whole story here. So definitely listen in on that conference call. And as always, when earnings season does start to ramp up again, it doesn't for a couple of weeks still, I'll be back with more on the various earnings charts. But for this week, you'll just have to satisfy yourself with this video. Be sure to tune in to all the earnings action on Zacks.com, and you can always get our earnings videos on YouTube, but be sure to check them out.